As promised, another round of 55 minutes of business awaits you here on Business Incorporated. Here's what we have prepared for you. Ethiopia has secured $60 million grant from the World Bank. And Ghana's debt servicing to hit 280 billion Ghanaian shillings. That will happen in 4 years. Angola has increased its targets of diamond production. They're set to hit 17.5 million by 2027. Welcome to the program. I'm Ini John Mekwa. We'll start from the global space as usual, telling you that oil has eased on Friday, heading for their first monthly drop since November as uncertainty over global economic growth and fuel demand from Washington's tariff threat, as well as further signs of a U.S. economic slowdown outweighs supply concerns. The more active May, we see a slipped 31 cents, that's about 0.4% to $73.23. Same value, same percentage for WTI at $70.05. Both benchmarks are on track to post their first monthly decline in 3 months. U.S. President Donald Trump said that he's proposing 25% tariff on Mexican and Canadian goods will take effect in March, the 4th day of March. There's also an extra 10% duty on Chinese imports. Also weighing on investor sentiment is the jobless claims that jumped more than expected in the previous week in the United States, while another government report reiterates that economic growth slowed in the 4th quarter of 2024. Let's stay in the oil space, but here in Nigeria, I believe by now, price slash has started being implemented at the pumps, at least those pumps or those companies, retailers that buy their products, Petrol, that is PMS, from Dangote. Of course, it's to the joy of the consumers. Well, let's try to understand where this is coming from with energy expert Kelvin Emmanuel joins us from our Abuja studios. Hi, Kelvin. Good afternoon.
Good afternoon, Ini. How are you today?
So I can see that you're happy, and I'm sure a lot of consumers are happy, Kelvin. But it would be better to know where this is coming from, this latest slash from Dangote Refinery. Is it coming from the global reduction in the price of crude, or is it domestic? Can you help us understand that?
Well, first of all, the reaction that I've seen so far, I saw some quotes and statements by some importers who said that Dangote is trying to run them out of business. And I remember last year, the same people said that he was trying to monopolize the market. And furthermore, I saw that they also said that they were pleading with him to raise the price back up, so that they would not lose money, because it looks like some other people are going to him to take products and they're going to lose money because their landing price is way above the price that he's currently offering the market for at gantry. And it's quite interesting because, you know, Nigerians are watching in amazement and wondering how a few group of importers will be asking the largest commercial domestic refiner in Nigeria to raise its prices, considering that inflation is biting very hard. Headline inflation today is 34.8%. I don't believe the CPI rebasing that was done recently. Food inflation is nearly 40% and is even more higher in some parts of Nigeria. So it's quite interesting that they will say that. But given as it may, like the factors that are really driving the reduction in price, you see that crude oil prices are easing because there is the U.S. government is engaging with Russia on the possibility of removing the oil and gas embargo on Russia, settle the war in Ukraine, and bring Russia back to the SWIFT system of global banking that has about 12,000 banks with headquarters in Belgium, and possibly have Russian banks be able to, raise LCs for Russian oil and gas companies upstream Gazprom and the likes that lift product out of Russia to the global markets, basically readmits them so that you don't have third-party trading in the Indian Ocean. That is driving the price of crude oil prices on international markets. Trump has also called for OPEC to work with his partners, both in OPEC and OPEC plus Saudi Arabia and the likes, to see that crude oil prices come down. But it's a tricky situation on the global markets because the break-even price for shale is a little over $60. So the U.S. government will want to maintain crude oil prices anywhere between $60 and $65 per barrel. And then you also look at Nigeria. You see the fact that in the last couple of weeks, the impact of the compliance with the circular the CBN has released last year on the harmonized system of reporting on net open positions, where some tier 1 banks onshore were holding a lot of FX liquidity and speculating on it. The introduction of the matching system that Bloomberg manages has basically, led to more efficiency and transparency in the foreign exchange market, and the volumes of foreign portfolio investors bringing in liquidity into the FX market, Nigerian Foreign Exchange Market, NFM, has increased. So you can see that the CBN is using part of that to draw down these outstanding obligations on forwards. Recently, Deloitte okayed for the remaining $2.4 billion of $7 billion that were owed on from dividend and capital remittances to be paid. So CBN is prioritizing and drawing that on that. So there's a lot of liquidity in the market right now, and you can see that the exchange rate is trending down. And we've always said that, listen, after the government decided it was going to comply with sections 205 and 206 of the PI on the regulation of the petroleum, downstream petroleum markets in Nigeria. And people went and said, oh, the government wants to kill them. The government wasn't trying to kill them. The government was trying to move to more efficiency. Two things came in and started controlling the price of petrol in Nigeria. Number one was the price of crude oil and the exchange rate, especially after Dangote started, So now you have a more efficient market, and you have a situation where basically Dangote is having to compete against importers whose quality of product into Nigeria you cannot verify and does not meet up with the acceptable standards as scheduled in sections 317 11 of the Petroleum Industry Act. So the regulatory framework and structure on how the midstream sector in Nigeria, which only came alive in 2024 after Dangote started producing white transportation fuels, is another conversation entirely. But these are the immediate near-term factors, driving the prices. And you can't take away from the fact that Dangote currently, I'm aware, he has hit 600,000 barrels per day processing capacity. And as interesting is doing that, because if you look at the fact that the schedule of allocation for crude oil under the so-called Naira-based crude swap dropped to about $62,000 per barrel, 62,000 barrels per day, as against what the government was saying. And Dangote has had to import about 12 million barrels of crude in February, and is going to import the same or more in March, because he's moving now from 600,000 barrels per day to 650,000 barrels per day, which will be full capacity. You look at the fact that the economies of scale has kicked in. The real economics of scale on him being able to tap into what they call positive cracking margin. It was benchmarked at anywhere between 500 and 550,000. He's crossed that threshold, and the scale has kicked in, and he's able to, move a bit around on prices. But he's operating a high volume, high turnover, low margin business, and the margin he's making as a refiner isn't as fantastic as people think it is. For him to be able to go down without crude oil prices coming down further or the Naira strengthening further from where you have it today.
All right, so the thing is, we see, and as you've noted, President Trump is working on restoring the full supply of Russian oil into the global space, among others. So what this would mean is that the price of global crude oil will stay down. And while that seeps to lower prices at the pump, it also means lower revenue for the government, because of course we know the target for the budget is 75. How do you think we can breach this difference, assuming that it stays at 70, 72, which is what we're saying, and as you noted, the U.S. should be targeting about 60. Then it should be good for consumers right here. But how do we breach that revenue difference that we may not hit?
Well, you've asked a very important question, and the reason why this question is important is because, when I saw the 2025 appropriation bill, and I saw the crude oil price benchmark at about $75 per barrel and an estimate of 2 million barrels per day for 2025, I said, to a few people privately that these estimates were not realistic. I don't know if the president had economists in the room, his presidential economic advisory council, to advise him on how the outlook for 2025, considering the political reality in America, was not exactly feasible. Considering the realities of the upstream sector in Nigeria, his outlook was not feasible. But there are two major important two important things that we need to pay attention to. And also going forward, how do you navigate this problem? Number one, Mr. President has to, I don't know if he signed the appropriation bill into an act yet, but if he hasn't, he has to revise his focus on the, number one, the price of crude, the benchmark price, and number two, the daily production target of 2 million barrels per day. I don't think it's realistic. You see, for you to increase crude oil production in Nigeria, you need to pay attention to shut-in wells. Yeah? You need to pay attention to stranded assets. You need to look at the onshore. For example, Renaissance, that bought the assets of Shell, I think has about 573 wells, if I'm not mistaken. There are issues around decommissioning, abandonment, remediation costs that forms legal liabilities that he needs to pay attention to. I think there needs to be like a second look at the commercial terms for the framework in the upstream sector that precedes companies opening FID, final investment decision. It's my view that when you model those commercial terms based on global best practices, that some of the incentives the government is giving is a bit too generous. It leads to excessive tax breaks for the operators. These are not the problems they have, because the number one driver of investment decisions in upstream sector is the recovery factor for oil and gas. Recovery factor for oil is 20, recovery factor for gas is 80%. And when you have a situation where the recovery factor is not higher than the hurdle rates as benchmarked in other markets, they don't open investment decisions. Today, the challenge is not just getting crude oil to subsurface, it's getting crude oil from subsurface to terminal. So these are structural issues that needs to be tackled, as against just giving excessive incentives and breaks to the companies. You've seen a few decisions. Bonga North, you expect to do 300 million barrels estimated ultimate recovery over a period of 10 years, but it won't achieve first oil until 2029. So the hope is on the onshore, how Seplat is able to navigate the challenges Mobil has had onshore, and how Renaissance Consortium is able to navigate the challenges Shell has had onshore, especially in River State. I also think the government needs to realize that Dangote is able to solve the total consumption of Nigeria on a daily basis. Nigeria doesn't consume more than 32 million liters. So you might have to come and ask NMDPRA to do like an audit of the actual daily consumption of petrol in Nigeria. Now, then the government also needs to, look at sections 317, 7 to 8 of the PIA on giving import licenses to marketers if the daily consumption in Nigeria is reached by the domestic refinery in Nigeria. Because they don't use cowries to import petrol. They use scarce FX that should go to other very important things to import petrol. So if you slow down on importation, you're going to see definitely that the FX market will improve, because there will be a reallocation of that FX demand to other priority sectors in the economy. And it will help, because a situation where you have scarce FX being used to import petrol that is already available in Nigeria leads to pressure on the rates. And when you have the Naira dropping steadily, inflation goes up, interest rate goes up, companies are not able to borrow. They run to commercial papers and corporate bonds. You don't see a lot of activity in the equity capital markets. You know, that impacts on the decision of finance available for companies to be able to produce. When production is lower than demand, prices go up. It's the cycle. You know, the government has to realize that this is the cycle and this is the way it works. The government also has to pay attention to public financing, or not just cutting spending, but also increasing revenues, which is the reason why, you know, the public hearings this week at the National Assembly has been great. And I have hope that when the tax bills are passed, you're going to see, after 12 months, a revision up of the tax and non-tax revenue to GDP ratio, with Nigeria the worst performer in sub-Saharan Africa up. And, you know, that will greatly impact on the macroeconomic outlook for Nigeria, especially as it impacts on issues like the usual default rating of the government and its ability to raise cheap capital on the international and international debt capital markets.
All right, Kelvin, thank you so much for that, taking us all through the connecting chains in the economy, from oil and to the Naira and all. Thank you so much for sharing your perspective with us this afternoon.
Thanks for having me.
All right, so let's move from the oil to the gold metals and see what's happening there. Gold edged lower on Friday and was set to post its biggest weekly drop in over 3 months on a stronger dollar, while investors are awaiting key U.S. inflation data for cues into the Federal Reserve's monetary policy trajectory. So we see the numbers are two reds to start with. Spot gold is down 0.1%, 2,800. You notice that's very closeness we had to $3,000 seems to be ebbing out. So it's $2,874.69. U.S. gold is also down 0.3, $2,886.80. Spot silver is on the flip side. It's up 0.4% at $31.37. Platinum is unchanged. Palladium is up 0.1%, $920.34. And you can guess, it's the Trump effect. And the threats that the tariff, the 25% tariff, will start on March the 4th, while extra 10% on China. And we know that China, of course, does a whole lot with the steel and aluminum and all. So that's the driver of that market at this time. We're counting down to the 4th. As the president of Mexico said, perhaps we would see another announcement instead of the implementation of that 25% tariff. So moving away from there, we're still in the global space. Global air cargo demand grew by 3.2% in January 2025 compared to the same period in 2024, and that marks 18 consecutive months of growth. This is according to the latest report from the International Air Transport Association, IATA. According to the global body, the capacity also expanded by 6.8% year-on-year, and this reflects continued recovery and growth in the sector. The report indicates that more goods were transported by air, and airlines made more space available to meet rising demand. IATA also mentions that international operations show slightly stronger performance, with demand increasing by 3.6% and capacity rising by 7.3%. However, the growth rate moderated compared to double-digit peaks that was recorded in 2024. A bit of corporate now. MTN Nigeria has reported a 400 billion naira loss after tax for the year ended December 31, 2024, as the devaluation of the naira drove up foreign exchange losses and weighed on the company's earnings. According to its audited financial statement that was released on the Nigerian exchange, the telecoms giant says the amounts represent a 192.25% increase from 132.04 billion naira loss that was recorded in the previous year, that's 2023. The telecom operator with over 80 million customers said that the sharp depreciation in the naira's value significantly impacted its foreign exchange exposure, with forex losses surging to 925 billion naira from 740 billion naira the previous year. Despite the loss reporting the result, the MTN Nigeria said its revenue grew by 36.03% to 3.36 trillion naira in 2024, up from 2.47 trillion naira in 2023, and that was driven by continued demand for data and digital services. And on the side note, I will say, now that we have the telecom tariff increase, hopefully we will not be recording a loss from any of the telecom companies in the country. Now, private sector players in Nigeria's electricity market are asking the federal government to bring down the price of gas, which will make the price of electricity charges to customers more affordable. The managing director of Welbeck Electrical Power, Mr. Afolabi Ayila, was a guest on Business Morning earlier today. He explains that independent electricity producers spend more on gas, which is priced in dollars and leads to transfer of cost burden on consumers. While commending some incentives announced by the government for stakeholders in the country's power sector, Mr. Ayila is asking for pricing of gas in local currency as well as removal of the value-added tax on the commodity.
If we can get gas at a lower price, at the same price or even somewhat higher than the GENCOs, but significantly lower than what we're paying now, we will be able to supply power to manufacturers at a much lower cost. If we are able to take up some of the power demand, it takes off some of the demand from the discos, from the national grid. They will then have more power to supply to their customers. It's a win-win. So I think something that definitely has to be addressed is domestic gas for domestic use. The price we're paying for domestic gas to produce power for industries, and then also that the gas price is still fixed to a dollar price. Gas should be in Naira, just like Dangote sells his diesel, his fuel in Naira. Gas that is produced in Nigeria should be sold in Naira. And then, of course, there shouldn't be any VAT on gas. VAT on gas should be completely removed. There's still some argument as to whether piped gas should be VAT waived, because CNG, there's no VAT. All other energy products, you don't pay VAT on. You only pay VAT on piped gas. That's the only energy product you pay VAT on.
Nigeria's first professor of capital markets, Uche Waleke, believes that a convergence of ideas from the academic and policymakers can deal with the fiscal barriers to wealth creation in Nigeria. This is the focus of the 50th inaugural lecture of the University of Nasarawa State, when he shared his latest findings on how Nigeria's macroeconomic headwinds can best be handled. Unlocking wealth and leveraging entrepreneurial knowledge ecosystems, understanding capital harnessing essentials is the theme of the 50th inaugural lecture of Nasarawa State University in Kefi. The inaugural lecturer is Nigeria's first professor of capital market at the Department of Securities and Investment Management, Faculty of Administration, Professor Uche Waleke. The man of the hour explains how he arrived at this theme.
God has given us all that we need to develop. The wealth that we need to develop, they are all hidden over there. So it is left for us humans, left for us creatures to unlock those wealths, to harness them, and to make them better, not to destroy. So that's the meaning of my name, Owaleke. The world make wealth. Okay? So you can see why I chose the title Owaleke as my topic.
The university is glad to be hosting eminent personalities who've come to listen to this latest addition to the body of knowledge.
Professional dictions, terminologies, and registers, taking note of the fact that the audience could be his professional colleagues, the university community, or the general public, who could be the end users of the products of his or her own research. It should therefore foster the required synergy between town and gown. In other words, between the universities and the industries. here in Nasarawa State University, KP. Professorial inaugural lecture was first presented on 26 March 2008 by Professor Olushola O. Abede.
Professor Waleke's presentation delves into macroeconomic issues in Nigeria, including debt management. He concludes that linking borrowing plans more to debt service ceilings than other debt indicators, while sticking to the golden rule of debt management that requires governments to borrow only to fund projects that are self-liquidating, is the right path to sustainable debt levels.
As we are about to witness the 50th inaugural lecture.
Let's take a break now. When we come back, we'll head to the markets. And of course, we also head outside Africa. That's after this break. Stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. Now let's talk about something that we deal with every day. Everybody's on social media now. We hear stories of it's not just for fun. You can actually earn some living from social media. But how many of us do have that strategy to do that? Well, we have joining us to expose some of this, maybe to some of us, media strategist Barbara Okafor joins us virtually from London. Hi, Barbara. Good afternoon and welcome to the program.
Good afternoon. Happy to be here.
Good to have you here. So everybody's on social media, but not everybody seems to be maximizing the opportunities on social media. We have some people who call themselves content creators, but we know it's not easy. Should everybody, let's start from there, should everybody be making money from social media, or should some of us just be there for fun?
I think it depends on your intersection and your goal with social media as a whole. You mustn't be making money from social media, to be honest. You can have it for fun, but social media does present opportunities for everyone, anybody from whatever sector, to make money from it. If you have the right strategy, if you can define what you want to achieve from it, and if you can, structure it in such a way that it could benefit yourself or your business. So it really depends on your goal and what you want to achieve with social media. But is there an opportunity for everyone to make money on social media? Absolutely.
Yeah, but I think it doesn't come easy. Nobody should think that it's really easy when you see people posting content on social media. It takes a lot of intentionality and effort. It doesn't happen accidentally, or correct me if I'm wrong.
No, you're absolutely correct. It takes a lot of work to post on social media. There are a lot of things that you need to consider. For example, for people who actually take this as their 9 to 5, people who are social media and content creators and content driven, a lot of them have to do a lot of data mining and being able to harness that core data. Doing a lot of audience research takes a lot of work. You have to do surveys, audience-centric interviews and things like that to gather your data. Then the aspect of when you have this data, you have to accumulate that data. Look at what the data is telling you. Look at your own personal goals and what you want to achieve. You have to define your audience, because you can't speak to everybody. There's everybody on social media, but you can't speak to everybody. And it takes a lot of narrowing things down and niching things down for you to be able to find out who you're trying to speak to. And that is just the beginning. You also have to go on to be skilled enough to produce your content or hire people who are going to do that for you. But before you even do that, you have to plan the content. You have to plan what time is going out. You have to plan it against the research you've done to see if your audiences are online at the time you want to, post it. You also have to think about multiple platforms, because there's a cross synergy of platforms in our digital landscape. A lot of new social media platforms are emerging. You have to consider, where do I want these things to be placed? How do I repurpose the content for LinkedIn to fit into Instagram? How do I repurpose the one for Instagram to fit into Facebook? How do I repurpose the one from Facebook to fit into TikTok? Because they are all separate audiences. And a lot of times you have to touch base across all those platforms to build your relevancy. So honestly, the work when it comes to content creation is a lot, but it's also very telling of the day and age we live in, because a lot of things are data driven. You have to be very, very strategic about things you do in any sector, in any business, and it applies as well in the digital landscape and when it comes to content creation and social media. So a lot of work is put into that. A lot of people don't see that sometimes, but a lot of work goes into creating content for social media. So you have to be mentally prepared and also prepare yourself when it comes to building your skills to be able to operate in that space. So yes, definitely.
Yeah, Barbara, I knew it. I knew somebody was deceiving us. You know, when you see people, all those content creators on social media, they're all smiles and, you know, looking good and makeup all in place, you wouldn't know that they have to take into consideration so many things. And I hear you talk about data mining. When you talk about data mining, where does it start from? What are the possible sources? What are the trends?
So it depends on what party is data mining. For brands, for example, a lot of people use primary and core data these days. So they track the behaviors and patterns of their audiences on their primary platform. So let's say a TikTok, for example. TikTok has primary data of the users who operate on the platform. So they track, you know, your activities, your behavioral patterns, things like that, and they can use that to make inferences on how to better structure certain things around the app, provide new product features, new upgrades for their users. Then when it comes to people like us, you know, the everyday users of these platforms, we can get data from different ways. Thankfully, a lot of social media platforms have specific data mining channels or specific data analytic touch points you can use. And there's a lot of apps like CrowdTango, Aeolus that could also give you insight into some user data. Then there's also the traditional one, which never goes wrong when it comes to structuring research and surveys for data, like proper data and market analysis and audience analysis. So there are a couple of ways you could do that. You could take on a mixed method approach where you design surveys in a quantitative way, or you could also add open-ended questions to your survey. Is left for you to decide. And you could also take the qualitative method where you do user interviews, you do focus groups and things like that. And there's a wealth of technological apps that make it easy for you to do, because it might sound a lot when I'm explaining it now, but things like SurveyMonkey, user interview, and the rest of them will help you streamline the process of getting this done. But those are the basic ways you can start to like mine your data and get your data source. And there's also, for people who don't have access to those tools, the ability to just ask your audiences what they want from you. That's also a form of data as well. As long as you can collect information and get feedback from people, then that is a source of gathering data.
It sounds like you have to also be passionate about this, and I don't think it's something you can do on the side. You know, you have a full-time job and then you're doing it even though you enjoy being on social media.
You can absolutely combine it with a full-time job. It's not easy. It's like every other, it's like you determining to have a side hustle, a side business. You can absolutely do that with a job. It sounds a lot, but as time goes on, as you have more information, as you've grown your user base, it becomes easier. And the thing about, you know, deciding to become a content creator or incorporating that into your brand is that every brand, think about it in this way. Every brand is trying to tell a story. You know, Channel Steve is trying to tell a story. You're trying to tell a story as a brand yourself. You aspire to be seen in a certain way, etc. And social media gives you those tools to tell your stories by yourself. And so when you think of it from that point of view, it reduces the work, because you realize you have to just bring your authentic self to the table. The other granular bits of gathering your data, doing your research, those things have to happen, but they don't have to happen every day. So when you've done that basic research and when you've structured that in a good way that helps you, you can now go into the flow of just telling your authentic story, bringing quality based on the audience research that you've done. So the hard part is actually mentally preparing that you want to do this. And I think it's something that anyone can do, honestly. It's just that you have to be strategic about it. That's the word. You have to be very strategic about it.
All right, Barbara, thank you so much for those tips. I tell you personally, I don't think it's for me, but it's good to have passionate people like you and so many other people creating content to keep us glued to our social media while making some money out of it. Barbara Okafor is a media strategist. Thank you for sharing those strategies with us.
You're welcome. Happy to be here.
I wonder if those strategies will work at the NGX. I don't know what the numbers are looking like, but Anete has the full information to give that to us. Hi, Anete. I see your strategy is working. A bit of recovery at the NGX. At least you're 0.4% in the green.
Well, Ini, I'm not too excited about these figures, and I tell you why. The reason is because of so far this week, which is the final week of February.
Final day, too.
Final day, exactly, last trading day of February. So we've seen just on Wednesday, we saw just a blip, just a 0.02%, 11 billion naira in value. And so far, the market has recorded 3 negative sessions. And this is just, to me, it's just, I'll call it like a mirage because the market is still...
Don't be too upset, Anete.
No, I'm not just too optimistic, but anything can happen.
Yeah.
The final trading day of February. Okay, so now let's go deeper into the market's performance. This is what we saw just about over an hour ago, 107,721.01%. Index, not percent. But that's a little bit higher when you compare it to the last close, which was 107,675.46 index point for the local bourse there. And we see that so far, the month-to-date has been reduced from 3.2% to about 3%, while year-to-date, well, in the green, 4.61%, but that's also a reduction, no thanks to the impact of profit-taking on the local bourse. But for the Johannesburg Stock Exchange, we also see that the intraday market numbers was down by 0.81%, 86,618.88. And for the other markets, EGX 30 and the Nairobi Stock Exchange closing in red. So the all-share index of Nigeria Stock Exchange was the only one struggling for gains, while the rest at intraday and for the close of Thursday, that's for the EGX and the Nairobi Stock Exchange all-share index, ended the day in the red. So that's it for the markets on the African continent. But now let's talk about the Nigeria's financial market, but this time on the FX side of things. So far, Nigeria's forex reserves, which is our firepower to defend the local currency, which has been taking a bashing from the greenback, that's the United States dollar. It has recorded about 33 consecutive days of decline. This is coming in the midst of CBN's intervention. So from the about $40.92 billion, it has reduced to about $38.58 billion. And this is no thanks to that, like I just mentioned, the CBN trying to make sure that there's liquidity in the market, there's stability in the foreign exchange market, and that stability has been recorded on the Naira side. But what about the forex market, the foreign exchange, the forex reserves level? But to give us much more insight into this, let's bring in Love Sewotu, forex dealer with FSDH Merchant Bank, to give us more details about that. Thank you for joining us, Love.
Thank you for having me. Good afternoon.
Okay.
So like you have mentioned, there's been a lot of stability in the FX market. The reserves we've seen that the reserve grew as at December last year. It closed around 40.8 billion, which is like the largest we have seen in a while. And now, but right now it has dropped to about 38 billion, owing to the interventions that we've seen the CBN doing constantly since this year began, especially after the implementation of the BMAT system, and also the coupon payments. But I definitely think that this would grow, as time goes on, with the Dangote Refinery boosting the reserves, saying that we're going to be having more, we're not going to be doing as much importation of oil as we used to do. And then we're going to be having to, because I mean, from the numbers, we see that Dangote can produce more than enough for the country and have excess for exports. And we've already started seeing those numbers, right? They started seeing, they had the first exportation of jet fuel this month. And with more of that, we'll see this reserve grow more and more in the year. And this stability is going to boost confidence of investors. And we've even seen that right now, and we see FPI flows coming to the market. Aside CBN intervention, which has boosted stability, we've also seen FPI flows coming to the market at over about 4 billion so far this year, right? And it's just a testament to the fact that there's been some level of stability recorded in the FX space.
Okay, so Love, that takes me to my next question. That the reserves, they've continued to decline at very much at an accelerated pace. But when you take a look at this, my question is, what will be the potential risk and opportunities for the foreign exchange market vis-a-vis, people who are trying to put their investment in there?
But like I mentioned, on the FPI side, we've seen FPI's confidence restored in the market, in the FX market, which has contributed to the flows that we have seen. So one of the major risks that we might suffer later on is, if these FPIs decide to exit the market, which I feel like, that might be the risk that would come up. But aside FPIs, there are also exporter flows that we have been getting as well, non-bank corporate and remittances. So if the CBN is able to, create strategies around how to create short channels for these flows to come into, so these funds are not coming into parallel markets, coming into the official space, we tend to see that the pressure on FX is going to reduce. We're already seeing now that parallel market and the official market, the gap has been, has closed up. And even on some days, you see the official market even trading higher than the parallel market is doing. So that pressure on the FX is already steadily reducing. So for risk, what I see is, maybe eventually FPIs might be looking to exit, and, there might be some pressure on the Naira again for that.
Okay, Love, I think we'll leave it there, but I just hope that that pressure on the Naira does not come, because the Naira is already over-pressured and undervalued. But thank you so much for your analysis and your time on the program.
Thank you.
That was Love Sewotu, Forex dealer with the FSDH Merchant Bank, giving us details about the Forex market, of course, which, of course, we're hoping that we get more accretion in the Forex reserves. Okay, so from Africa, our next stop, as usual, is the Middle East, which is mostly in the red, United Arab Emirates, as well as that's the two indexes on the United Arab Emirates, as usual, Dubai and the Abu Dhabi, both in the red at intraday trading session, 0.78% for the Dubai and 0.40% red for the Abu Dhabi index. And for the Saudi Arabia and the Qatari stock exchanges, they were closed for Thursday, both in the red, and then tomorrow, though they'll still be on holiday, but tomorrow is the start of the Muslim fast. So we hope that by Sunday, when the markets resume, both the Saudi Arabia and the Qatari stock exchanges will come back in the green, hopefully, fingers crossed. And from the Middle East, let's go over to the United States. Stock futures are a little changed, and this is because investors, most of the investors are looking out for that much expected personal consumers expenditure report from the world's biggest economy, which will be coming at about 2:30 Nigerian time. And of course, the average futures there, as you can see, 0.33% in the green for the Dow Jones Industrial Average, S&P 500, 0.34%, and the Nasdaq Index, 0.29%. So now, with just a Friday session left in the trading week and the month, the major indexes are actually on track for a loss. So far, the market has not really been doing too well, but we just hope that the PCE index, when it comes out, would come out in the green. And actually, what the expectation is that the core PCE is expected to increase by 0.3% month on month, and then 2.6% year on year. So we look out for that number at 2:30 Nigerian time, as I mentioned. And finally, for the markets that we track, this time on the Asia region, Asia Pacific regions, we see that the indexes are also in the red, no thanks to the Trump tariff. Trump tariff has dominated most of the market activities, not giving them a breather, not giving them a good sign, not even giving them a good number print. We see that the Nikkei was down more than almost close to 3%, and falling below what we initially tracked at 39,000. The market was still trying to celebrate the 39,000, which was able to hold on to, but no thanks to that tariff threat, the market has plummeted by about 2.88%. The same thing for KOSPI, that's the South Korea, which is the biggest decliner there, 3.39%. and that markets index has really shaved off quite a lot from its number. The Hang Seng index, almost a similar picture there, 3.28%, 22,941.32 for that market index. And for the other two markets, which is one of the biggest economies, or two of the top 5 biggest economies there, Shanghai, that's for China, 1.98%. And then the Nifty 50, 3.28%. Talking about China, which is one of the countries that the United States is facing in terms of the tariff threat, which is expected to kick in as from next week, to be precise, March the 4th, is already threatening that it will come up with a retaliatory tariff against the United States if the Trump administration goes ahead with that. And that the new tariffs, which will be on top of the 10% further tariffs that Trump had levied on China sometime earlier this month, that's to be precise on February. Because of that, the country has said that after that first round of tariff earlier this month, its retaliation against the U.S. could include raising duties on certain energy imports, as well as putting 2 U.S. companies on unreliable entities that could restrict their ability to do businesses in the Asian country. And so far, China has increased controls of exports of critical minerals that the U.S. needs. So far, we look out for how that tariff threat by the 2 biggest economies, as well as other economies, would impact on the market. So, that's it for the market.
Thank you so much, Anita, for that elaborate run around the markets and the drivers.
Pleasure.
Thank you. All right, now let's go to Berlin. Safety concerns in the aviation sector is the big news there. This year, it's brought the industry to the limelight. For today, it's a French-German company, Airbus, that's exploring concepts of replacing the second pilot and enhancing automation so that tech can help pilots and give them time to rest. We have to give us more on this, Vada Imran. Vada has been on this run since the week. Vada, good to have you. Good afternoon. So what's behind this Airbus plan, and what are the prospects of it?
Hi, Eni. So happy to be here on this Friday. Yes, let's start with Airbus's plans, which is to, like you said, gradually reduce the number of pilots flying a plane from 2 to 1. Global aviation rules right now require at least 2 pilots on a plane in the cockpit for all commercial flights and even cargo flights. And the 2 perform core duties. The captain or the main pilot is responsible for flying the plane, planning and performing all the safety security checks. And this is usually the person you hear on the speakers when you're traveling. This is your captain speaking. And then there's the co-pilot, and it's their job to monitor controls during the entire flight. They're also the alternative and backup operators, so both pilots get adequate rest. Now, Airbus's plans is to reimagine this to somehow remove the second pilot. Their proposal is that 2 pilots are in the cockpit during takeoff, and then the co-pilot goes to the cabin to rest, leaving 1 pilot alone for hours. And then there's 2 pilots again in cockpit for landing. Airbus says that this would, this enhanced cockpit technology would be a replacement for the second pilot during, normal cruise hours.
Yeah, but how are the different airlines, what are they saying? What are their views concerning this?
Well, I must say pilots here in Europe and actually all over the world are very unhappy. They say that they can't believe Airbus came up with a concept like this. Otian de Bruyne, president of the European Cockpit Association with 30 years of flying experience, said that Airbus's plan is a gamble with safety. He says that airplanes are very complex and are flown in very complicated environments, and that this is only possible with 2 sets of brains and 2 pairs of eyes and not 1. Rachel Deschler, certification director of the EU Aviation Safety Agency, told DW that such new cockpit technology is intended to improve the safety of the plane, and that in the future, 1 pilot would be in control of the plane with the help of that same plane. Lufthansa, which is the German national air carrier, has worked on this concept as well as Asian airline Cathay Pacific. So it seems airlines are a bit interested, but none of them have committed to using this technology for now. Pilots are of the opinion that this new concept is more of an advantage for airplane manufacturers because they can have an edge over competitors and reduce costs, but that it's not viable for the aircrew. Commercial pilot Tanya Hatter told DW that the profession would radically change if there is a pivot to just one pilot because it's too much pressure, honestly, to be just on one person.
Yeah, well, one would have thought that perhaps the pilots would be happy seeing that they would have more rest time, but I guess a different perspective from different individuals. Let's look at the markets now. What are investors doing?
Well, Ini, markets here are still reeling in and extending declines. The mood remains very gloomy as U.S. President's tariff threats turn to reality. The DAX is down 0.4%, red again for the second time in a row. So were all its other European peers. The Euro Stoxx 600 was also in decline. Now, latest comments from the U.S. indicate further tariffs on China. So this is making markets here, and I guess worldwide, pretty nervous. Tech stocks in Europe also took a hit after the Nvidia earnings report, which failed to impress investors. So in response, chipmaker ASML and ASM International fell by more than 3% each. And luxury stocks, which are exposed to the Chinese market, slipped as well, with the pan-European luxury index shedding 0.7%. And this, as you may know, was triggered by the latest announcement of additional Chinese tariffs. Investors are also keeping track of the political pulse here in Germany as official coalition talks begin today between the CDU and the SPD. 9 negotiators from each side will sit together to see if the two leading parties are capable of working together. And investors also kept a close eye on German employment numbers, which are out. And official data says the number of unemployed people in Germany stood at 6.2%. This means close to 3 million people are still out of work. And this is the confirmation of a continued weakening of the German economy. And that's all from Berlin today, Ini.
Yeah, thank you for being so active all through the week, Vada. Do have a great and restful weekend.
You too.
Now, let's see what's happening in other parts of Africa, apart from Nigeria, that is. Ethiopia has secured a $60 million grant from the World Bank, and that is supposed to support vulnerable populations in the climate-stressed and conflict-affected parts of the country. The Finance Ministry and World Bank signed a grant agreement through which the bank would implement its innovative systems to promote integrated, resilient, and enhanced responses to women and girls' health projects. Then to West Africa, President of Ghana, John Dramani Mahama, has disclosed that the total debt service to be made by the country will amount to 280 billion Ghanaian shillings in the next 4 years, comprising 150 shillings for domestic and 130 in external debt servicing. In Angola, the country aims to boost diamond production to 17.53 million carats by 2027 under its National Development Plan 2023 to 2027, and to leverage mining revenues to enhance food security, job creation, and poverty reduction. And then we go to the money market in Kenya, where the government has raised 194 billion Kenyan shilling. That's about $1.5 billion from the issuance of a new Eurobond, in a move that could raise concerns about the government's borrowing appetite. Let's dash to the crypto space and see what's happening there. Well, without even saying too much, we can see that the red continues in this market. Bitcoin has been dropping to levels, well, they said it was 81,000, that was the resistance. But we see we've gone below that. In about 24 hours, we've lost 7.64% on BTC. We'll get Solomon Amunde to tell us what they are doing to this market, if he's there. But just before he comes, some headlines right there in the crypto space. Ethereum, it raises 50% value post Trump. So the Trump excitement seems to be dying down or has died down. Ethereum has erased 50%, and the SEC has dismissed lawsuit against Coinbase, signaling potential regulatory shift. The coming days will say more, winning on one side and not so winning on the other side. South Korea has introduced an official crypto crime unit. We've been hearing of Hasten and all of that happening in the crypto space. So in South Korea, they now have a special crypto crime unit that's supposed to deal with that. In Ukraine, they are mulling between 5 and 10% tax on crypto income amid legislation push. So another legislation possibly going on right there in Ukraine. If we have Solomon Amunde, let him tell us what we can expect next with Bitcoin. Solomon, good afternoon. This red is too much. Oh.
Good afternoon, Nini. Good afternoon. Yeah, it's quite much, though. It's quite much, no doubt. But if you look at the gain Bitcoin has made in the last 6 months, it's fair to see a little bit of red, though. Can you hear me?
Yes, I can hear you, Solomon. Please go ahead.
Yeah, okay. I said if you look at the progress Bitcoin has made, the profits, the rally within the last 6 months to 1 year, it's kind of fair. We've seen a brief correction. The correction we're seeing from Bitcoin all-time high, it's approximately about 32% or thereabout. And Bitcoin is just trying to fill some fair value gaps.
But Solomon, how can you call this kind of correction a brief correction? We've gone below 80. We're on 79 now. We don't know where next we're going to. This cannot be described as brief.
Oh, well, I'm calling it brief based on the fact that as at 6 months ago, Bitcoin was still struggling to go above 65, 70K. And obviously it was the Donald Trump election that actually pumped it to as much as 100K. And truthfully, that happened within a very short period of time, the spike. So it's only wise and normal that at least the chart kind of like corrects itself, comes down to gather momentum around 70K before it makes a move for another new all-time high. So this is like the best time for investors to begin to DCA gradually until we see like probably 70, 72K. Then we can pick up momentum from there again to make new all-time highs.
All right, Solomon, we'll take heart in your optimistic observations and perspective this afternoon. But we hope that it ends soon because, I mean, the drop just looks like it's unending. But thank you so much for your views this afternoon, Solomon Amunde.
Yeah, thank you very much, Ini.
All right, so I guess crypto investors, you can't win all the time, and this may be a good time to invest. You know, maybe there'll be another Trump election and inauguration that will bring it up again. But anyway, we'll watch this space and report to you as we always and love doing. But that's where we close the curtains today on Business Incorporated. Thank you so much for being a part of our programming all through the week. We do not take your presence and your views for granted. We know we're keeping you informed, but you also motivate us to go get the news. And we'll keep doing this. We'll continue next week, God's grace. Have a restful weekend. Bye-bye.